Exercise 16-20, we're going to do a complete statement of cash flows. So here we have the income statement and additional data of data plus Inc. follows. So we can view the income statement and the additional data right there. So prepare data plus Inc. statement of cash flows for the year ended September 30th, 2025 using the indirect method. Include a separate section for the non-cash investing and financing activities. So we have then complete the statement one section at a time, beginning with the cash flows from operating activities. Use a minus sign or parentheses for amounts that result in a decrease in cash. If an input field is not used in the statement, leave the field empty. Do not select a label or enter a 0. So the operating activity section always starts with net income, and we get the net income from the income statement. So let's go ahead and open that up. So when we open up our income statement here and scroll to the bottom for that net income, it's $51,000. So we can go ahead and copy and paste that over for $51,000. And in case you forgot what goes where, remember we're starting with operating activities section, which is blown up right here. And of course, if you forgot why these things were added or subtracted, you go back and rewatch these videos listed on this cheat sheet. So next on our cheat sheet, after net income is depreciation, depletion, and amortization. Now these will be found on the income statement. So we need to go back them out, and because they lower net income, we need to get them back out by adding them back in. So let's see how much depreciation this company had. And here we go. Here's our depreciation for $26,000 right here. So we can go ahead, and since we're adding that back in, paste that in the first cell for $26,000, and that is depreciation expense plant assets. And we don't have any depletion or amortization. So next, according to our cheat sheet, we have gains and losses, and we're going to back these out. And we would find a gain or loss if it exists on the income statement. And I don't see any gains or losses on the income statement. And then after gains and losses, the next thing we're going to do is we're going to analyze the changes in current assets and then analyze the change in current liabilities. Now, the order that they go in doesn't really matter as far as you put them all in the cash flows from operating activities section. So let's look at our current assets now. So we're going to close out of the income statement, open up our annual data. So then according to our cheat sheet, we're going to check on AR. So then we're going to go ahead and go with AR, and it looks like AR started here in 2024 at $59,000 and lowered to $41,000 in 2025. So since that's a decrease in AR, that will be our label. So we have a decrease in accounts receivable, and that difference there is $18,000. And what was the effect on cash when AR decreases? Well, if AR decreases, cash must have gone up because we collected on AR. So the amount of the $18,000 will be going up then. So we can go ahead and input that here. And you can always double check your cheat sheet if you don't have that memorized. Because a decrease in a current asset, you add it in. Meanwhile, a increase in a current asset, you subtract. So next we have inventory, which went here from 93,000 to 97,000. So that is an increase in inventory. So if inventory went up, then cash went down. So we're going to go ahead and subtract out the difference here of 4,000. So that is an increase in merchandise inventory, but that will be a negative number because again we are purchasing that inventory. And that appears to be the last of the current assets. So the next part of our cheat sheet says we need to analyze the change in current liabilities. So for our current liabilities, we have AP here. So our AP went from 17,000 and increased to 30,000. So what must have happened to cash if our debts went up? We must have purchased more on account. So we're going to go ahead and add that difference of 13,000. So this is an increase in accounts payable for a positive 13,000. And always double check your cheat sheet. An increase in current liabilities means that you add. Notice the arrows here on the side. And next up we have accrued liabilities, which is 24,000 here for 2024, and then it decreased to 11,000 in 2025. So then what must have happened to cash? If our debts went down, we must have paid them off. So we're going to go ahead and subtract out 13,000 in this case. So that's going to be a negative 13,000. Make sure to include parentheses or a negative symbol there, and then that is a decrease in accrued liabilities. And then looking at the rest of our additional data, I don't see any other current assets or current liabilities. So we're done with this section, and then we have to add it through here for a total of $40,000. And then add that adjustment to reconcile to the net income for a total of $91,000. So what this means is from their operating activities, which is the main reason that the company exists, is to buy and sell services and products, they had a positive $91,000 of cash flow. That's good. And then getting back to accrued liabilities, if you forgot what an accrued liability is, it's, remember, this is a current liability, therefore it's something that's going to be paid within the next 12 months. The most common example of accrued liabilities would be salaries payable. So if our salaries payable went down, then we must have paid it, therefore cash went down. And let's go ahead and check our answer so far. Well done. Okay. So then the next portion here, we have cash flows from investing activities. So now we're going on to cash flows from investing activities. So what goes in the investing activities section changes to long-term assets, but again, only if they involved cash, because remember this is the statement of cash flows. If there is a change to a long-term asset that did not involve cash, it would go into the last section, the non-cash investing and financing activities section. And here's another way to look at it. Investing cash flows happen when there's changes to long-term assets. So what we're going to do is we're going to go on and figure out if they affected the cash for the investing activity section. And then after that, the finance section. So let's look at the first one, the acquisition of plant assets. Now, plant assets or long-term assets, they're going to go in the investing activity section if they involve cash. So we acquired some plant assets for $119,000, but $100,000 of it was paid in cash. So we're going to be using $100,000. For cash payment for acquisition of plant assets, again, it's going to be that $100,000 right here. And as a reminder, do we have cash going up or down? It is actually going down, so we will be making this negative $100,000. We next go on to cash receipt from sale of land. Land is a long-term asset, therefore it's going to go in the investing activities section. So cash, when it's received for that $28,000, since we received cash, it's positive. So we'll go ahead and input cash receipt from sale of land for a positive 28,000, since again cash is coming in, so going up. And then there was no gain or loss. We already know that because that would have appeared on the income statement. So then we go ahead and add these through for a total of negative $72,000 from investing activities. Let's go ahead and check our answer. Fantastic. Okay. So for the conclusion of our investing activities, we have a cash outflow. In other words, negative. We're using cash to invest mostly in what looks like acquiring the plant assets. So then we are not done yet. Let's scroll down. So then next we have cash flows from financing activities. Let's first get back to our cheat sheet for section 3. The financing activities section is changes to long-term liabilities and equity. And if you look at over here, financing is long-term liabilities and equity. So depending on which way you look at it, with this method, because it's visual, we're looking for anything to do with long-term liabilities and owner's equity. And the first one, cash receipt from issuing common stock. Common stock is equity and we receive cash. Well, this is positive. So how much cash did we receive? It tells us right here we received $29,000, and that's positive. So we have cash receipt from issuance of common stock, and then that is for that $29,000. And next here we paid off a note payable for $18,000, so our cash will be going down. So we have cash payment of notes payable for that $18,000, and that's going to be negative because again we are paying it, so cash is going down. And then next we have payment of dividends for $8,000. And dividends, remember, are paid out of retained earnings, and retained earnings are part of the equity, therefore goes in the financing activities section. So we'll go ahead and input that here. So cash payment of dividends. That will make that a negative $8,000. So now we're done with the financing activity section here. So we'll add those up, and that is going to be a positive $3,000 for the net cash provided by the financing activities. Let's go ahead and check our answer. Excellent. Okay. So still another piece. We have a net increase decrease in cash. So to check cash, we can do this one of two ways. We can take a look at it here. Easiest way to see it is, looks like our cash increased by $22,000 this way. The other way is to add these numbers here. So the net cash provided by the operating activities, the investing, and the financing, and that would give us also that same $22,000. So that's another way to double check your work, which we should always be doing there. So 22,000 increase in cash. So next they're asking for the cash balance at September 30th, 2024. Easy, that's right here. $8,000 in 2024. So I can copy paste, type it in. And then we have cash balance September 30, 2025. Again, we have that number here for 30,000. Go ahead and enter that in. And now we have our non-cash investing and financing activities. We have one item here, and there was a note earlier about it. That's in part A. We signed for a $19,000 note payable for this acquisition of plant assets. So that's going to go down here for 19,000. Acquisition of assets for issuing notes payable. And we leave this number as a positive because cash isn't either going up or down, which makes this the only item in the non-cash investing financing activities. So we'll go ahead and input that number here as well. Drop it down. And then we can go ahead and check our answer. Fantastic. And that is how you complete a statement of cash flows.